Hey, personal finance class. So we're moving on with chapter 11. We're on to the second part, and here's what we're going to be covering in part two. Again, I expect that you're writing this stuff down. It's going to make it easier to answer the questions as we go. So the first thing you'll be able to do at the end of this chapter, or the end of this part, anyways, is explain the key terms that you should understand when comparing credit cards. So there's lots of different terms, and generally, all cards will address, will have aspects that you need to understand of these different terms in order to compare them. Compare one card to another. And finally, what types of incentives are available for different kinds of credit cards? So let's get right into it. So, when you're choosing a credit card, you have to be familiar with various features and options that are similar across all credit cards. The first one you need to understand is, of course, your credit limit. So, your credit limit is the maximum amount that you're allowed to borrow at any one time. So, again, we talked about revolving open-end credit, and they tell you, all right, you're capped at X amount of dollars. You can borrow up to it as much as you want, then pay it off, right? So your credit limit is the total amount, the maximum amount that you can borrow. And of course, that's determined by your credit worthiness. When issuing the credit card company is going to run your credit and take a look at your history and say, all right, does this person, how much money are we willing to lend this person? That's your credit worthiness. And of course, that's the factors that go into that are your credit history, your income to expense ratio. And of course, if you carry a balance on other credit cards and you keep it near that limit, that will negatively impact your credit score, as we talked about in the credit chapter. Another term to understand is overdraft protection. Now, this will probably be a little bit confusing when we talk about banking because they also have overdraft protection, but it's almost the exact opposite. So when we're talking about overdraft protection in a credit card, it allows you to actually exceed your limit. In order to get protection, it lets you go over your limit, but there's a price, of course. You will get charged, but you won't get declined. You won't go to a store, and if you have a $500 limit and their purchase puts you at $517, it depends on how you set it up. If you have overdraft protection, it's going to let you do that, but it's going to charge you. Exactly. Your overdraft fee is going to be charged, but your credit card will still work. And again, this is something you need to know yourself and understand your buying habits, and know whether this is something that you want to have, you want to be allowed to do. And going over your credit limit, of course, has other potential repercussions. It depends how the card is set up. So you need to pay attention when you're comparing credit cards. Some will allow you to go over your limit, and then instantly your entire APR is going to go up for the life of the card, or until you pay the whole thing off. Or maybe, again, it depends, until you get down below your credit limit. So got to pay attention to overdraft protection. That can be very, very expensive. It can be good to have because, again, if you have a $500 limit, don't even carry a balance, but say your car breaks down and your only option is to put it on your credit card and it costs $520. Well, you will be allowed to do that. Again, depending on how the card is set up. Another thing credit cards do is they charge you an annual fee. Now, I mentioned this in the last episode, but I avoid cards that have annual fees. I just feel like there's so many cards out there. I think you don't need to have a card that has one. I'd say a lot of them do, but I would say the majority do not. So it's something to take a look at. If you want to pay it, pick a different card. Again, you have to balance that against, other perks of the card. But in general, I've always avoided them. But the annual fee, cards will basically just say, okay, once a year, we're going to charge you, X amount of dollars. Sometimes it's small, it's a $25 or $50 fee. Other ones have very large fees, like the one I was telling you about that we applied for. I believe it's the one my wife applied for. It's like a $250 annual fee. But again, if you balance that against the benefits of it, she puts a lot of things on that credit card and, of course, pays it off every month. So we get much more than $250 worth of benefit from the card. So it's worth it for us. But if you're just going to get the card and then, tuck it in the shoebox and not use it, it's going to cost you $250 a year and you're not going to get anything out of it. So you have to understand how you're going to intend to use the card and how much the fee and is it worth it. So there's a lot of things to balance when it comes to this. And again, they're going to charge that fee regardless of usage, right? If you just have like an extra one in case of emergencies, you probably want to have one that does not have an annual fee. So it can just be there in case you need it and not cost you money if you don't use it, or whether you use it or not. And as I said, it's best to avoid these if possible. All things being equal, you can usually find a card with similar benefits and no fees. So here's a big one. So most cards that are out there today have some type of incentive. A lot of them offer cashback bonuses. That's what I have on my credit card. I just like 1 to 5% of it just comes straight back to me when I choose to take advantage of it. And I just have it go toward my balance, and that's that much less I have to pay off that month. The airline cards offer miles, and they allow you to redeem those for airline tickets. So if you like to travel, you might look at cards like that. Some offer donations to charity. You can get, there's one for the AMC. I'm a member of the Appalachian Mountain Club, and I didn't get the card, but one thing they offer is, you get an AMC, Visa card, and then every time you spend $100, they automatically make whatever, a $5 donation to some charity. So that's another option if you want to support a cause. And a lot of them have, it varies. I mean, lots of them do it different ways. Like I had a card I used at BJ's, and you get a certain number of points, and then when you achieve a certain number of points, you can get like a gift certificate, or you get so much money off your next purchase. And it's just a way to keep people interested in spending more money and feeling you're getting something out of it. I've heard of other ones too. Like my brother has one from Fidelity, and he has it connected to his retirement account, and he has like a roundup option. So every purchase that he makes on his credit card, let's say it's $50.25, it'll round it up to the next dollar, and it'll put that 75 cents in his retirement account. So he saves a lot of money, but it doesn't feel like he is. So if he uses credit card 5 times a week, then that's up to what is that, maybe $1 to $5 at the most that he's actually getting towards his retirement. And, if you do that over a long amount of time, you can save up some pretty decent money. There are things called prestige cards. These are interesting. I've never had one. I don't really see the need. I don't know. I'm not the kind of guy I need a special credit card to prove something. But anyways, you'll hear about these. There's like platinum cards, or the black card, the American Express Gold card. That used to be a thing until they replaced it with something even better, like a diamond card or something like that. But they only give those to extremely highly creditworthy applicants. All right, so the people who are making a lot of money and who don't carry large balances, things like that, they get targeted for these really special cards. And why do you think these types of people will be given really highly prestigious cards that have higher limits and lower fees? Why do you think that would be? Why would a credit card agree to give better terms to certain people? Well, in short, they do that because those people spend more money and they make more money when that person uses their card. There might be the people who are putting cars and vacations and things like that on their credit cards, and of course paying it off. But those types of people who are very highly creditworthy will get better benefits from these better cards. So other benefits and incentives are things like special warranties on purchases. Some cards say, you have an automatic warranty on anything you buy with our card. And you can, if something goes wrong, you can just call your credit card company instead of calling the vendor, and they'll help you take care of it. Travel insurance. So if you make a purchase of travel through your credit card, you automatically have insurance. In other words, so if you need to cancel, you can cancel your trip and not have to go through again, the airline or the vendor that you booked it from. You can go through your credit card company, and they will automatically carry you on their travel insurance. They can have extremely high credit limits, and some even have no credit limits. So, all right, another term to understand is what a grace period is. So we've talked about smart use of credit cards, and if you are able to use your credit card and then pay it off within that grace period every month, you will never pay a fee to your credit card company. And it's a wonderful way to use a credit card. But the grace period is, to put it simply, it's that period during which you're not charged any interest. You have a certain amount of time to pay off those purchases and not pay any interest on those purchases. It's usually about 20 days from the statement close date. So in other words, if I spend, so for example, today is Star Wars Day. May the 4th be with you. If I spend, $1,000 in the month of May, and then on the 31st, my credit card company will mail me my statement. I'll get it on whatever, the 2nd or 3rd of June. It'll show everything I spent as of the last month. There won't be a charge on that as long as I didn't have a balance to start that month. So there'll be no interest reflected on that May statement. And then I'll have another about 20 days. And if I submit my payment and if I pay it off within that 20 days, then I'll never pay interest. I mean, that's the way you should really intend to use your credit card. And that's the best use for it. Make sure you can pay it off within that month, pay it off during the grace period, don't pay any fees. And if used that way, credit cards are essentially free short-term credit. And that's a wonderful thing. All right, something to understand is cash advances. I actually did this on accident once. You can actually you have to set it up this way, of course. You have to contact your credit card company and set up a PIN, which I don't remember doing, which made this whole situation really confusing for me. But I noticed on my credit card statement that I had taken out like $40 cash advance. And I was like, no, I didn't do that. And of course, I called them and I said, what is this cash advance? I didn't do this. I've never even set my card up to use it like an ATM card. They said, well, it was used. And they mentioned the name of the town that my sister lives in New York, upstate New York. So I went there and I remembered using the ATM and I was like, man, I guess I used my credit card and I guess it worked. So it was bad. I mean, they charged me like triple the APR and any cash advance. But then when you do it, I had a balance at that time. It was in the thousands of dollars. And then, of course, they say, okay, well, you've borrowed all of this just on your normal rate, your normal APR, and then you have this amount, and that's at this APR. And of course, I paid it all. After I paid it all down, that's the last amount that you pay off. So you're always going to carry that, $40 at the triple APR until you pay your card all the way down to zero. It's really obnoxious the way they did it. But I don't know why I was able to do it. But you can take a cash advance on your credit card. You can take cash out. I don't recommend doing it. And of course, that cash advance goes towards your maximum. You can't just take it out. You're essentially borrowing money from yourself and paying the credit card company an awful lot of money to do so. And often that cash advance has a separate maximum. Like if you get a card with like a $5,000 minimum, it'll have a cash advance max of maybe $1,000 or $2,000. They won't let you take $5,000 cash out. It's a pretty risky endeavor. And again, that usually has a much higher APR. And what does that stand for? Annual percentage rate. Yes. And there's often significant fees on top of the APR. All right, and I believe this is the last part we're going to cover. One of the most basic things you need to understand about your credit card is what's the finance rate? What's the APR that you're going to pay on all your purchases? Again, assuming you don't pay it off within that grace period, which you should. So the rates can vary greatly. I mean, a lot of cards offer like a low introductory rate of 1, 2, 3, 5%. After 6 months or after a year, they'll go up to the normal rate, which is often around 20%. Yeah, they can offer teaser rates, like I just said. And of course, your APR can change for the life you have it in an instant. If you have one late payment, if you read the fine print on your credit card application, if you're late even once, your APR changes and it goes up to close to 30% or more. Not a good situation to be in. You can call them and you can often negotiate it back down after you make a couple on time payments. And of course, if you just do it once, they're willing to, keep your rate where it is. If you do it twice, 3 times, they don't talk to you. They're going to keep that rate really high. Okay, so let's talk about what we just talked about. So, part 2 objectives. First one, what are the key terms to understand when comparing credit cards? What are all these things, A through H, that we've talked about that you need to understand when comparing credit cards? And second, what type of incentives are available? What are the good things that credit cards could offer you? Okay, so we're going to stop there. Talk to you guys during part 3, and have a great day. Hope you're enjoying the nice weather. Take care. Bye.